let's check on the markets and see if we can predict the week. Hi, this is Nick doing the homework on Monday night. I'm going to start by saying what's my conclusion, and then if you stick with me to the end, I'll walk you through the logic. I promise you it won't be long. We are buying dips. If we drop in the S&P, we're looking at the SPX 5-minute chart to show you the behavior. And every dip, they're buying and making a higher high. Dip, higher high. So my assumption is that this should continue. So if we have a bad day tomorrow or the day after, and we fall 1 to 2%, I would anticipate they will find footing as they fall just below 5,000, if they do, to try to make a higher high. I say try because at some point this behavior stops. However, to be safe for the bears, and they shouldn't assume that this is it until they see a significant lower low. And the first one doesn't come until we lose this point right here, which is 49.50, 49.45. If the SPX, this is the SPX, if the SPX, which represents the S&P, falls below 49.45-ish, then you can say, okay, we made a lower low and a lower high. And then we start tracking to see if it's a trend or just a blip. Until then, I would use dips to close bearish positions, whether for profit or fixing them. And maybe if I wanted to do something short term, I should take some bullish positions. So far, we have forecasted the market perfectly. For example, I'll show you this one where we bounced last week violently. Penny, perfect to a target we had earlier. If you've seen this chart from me before, it was a forecast that came to fruition to the penny a day and a half late, but that was impressive enough that we nailed it to the penny. What we didn't expect is how hard they would bounce in a matter of basically hours. So you can see how the price action on Monday was somewhat bearish. So that leaves the bulls somewhat vulnerable short term. Like if they don't make a new high above the overnight highs that we had on Monday, Sunday, then they are vulnerable to give back some. How much? About 1.5%, maybe 1.9%, 2%, only to fall into that range that we talked about where they will find support. Remember, the target in the SPY on a longer time frame is 530 to 560. That's the breakout, the technical breakout. We're waiting for sentiment to flip in order to say, nope, this is not going to happen. So where's the source of the sentiment flip? This week, we have catalysts from GDP, some Fed heads talking, don't know what they're going to say, don't really care. And we have, I think, probably the most annoying one would be the PCE. I'm told that the Fed looks at that intently. So inflation. You know who else looks at inflation? The bond market. And the bond market started the day green today and ended red. I'm going to go here and show you the IWM on a longer time frame. So there are two values that I've been posting as important, 205, 206. And I'll show you why. Because if we break out of 205 and 206, next resistance level is way too old to matter a lot. Okay? And that leaves us with a form of breakout, which will say to the S&P, hey, you guys want to run? I'm ready to run with you. So the IWM will have a lot of upside, and the SPY will have the opportunity to fulfill its promise of 530 to 560. All right, so let's see if we can get some more information about these small caps. Here's the RUT, which is also the small caps. And I want to show you that because like the SPX, the RUT doesn't trade overnight. So it shows gaps clearly. And you know what it also shows? It shows that the small caps are like allergic to this zone right there at 2020 something. They just closed the gap right there that we had suffered on the 16th. We had a drop, took them a few days to find footing, and we just closed the gap. So all they need is to rally 1.5%, the small caps from where they closed. They closed on the strong point on Monday, which was very surprising. If they go more than 1.5, 1.6%, these small caps are broken out, and I think they can rally at least 5 to 10% above that, if not 18. But more importantly, it would free the major indices to do what they want because now all the indices are in unison, up, up, and away. I'm a guy that says we're somewhat stretched. We could benefit from a dip. That sentiment alone that I have should not justify me shorting every green tick. But it should stop me from following blindly. If I'm a momentum trader, I'm okay to buy high and sell higher. They do that. Investors need to be patient because there are not that many obvious entry points. All right, I will do a couple more videos throughout the week to catch us up on some tickers.